Hey guys, welcome to another episode of Professionally Curious. I'm here joined by my very good friend Dave from Osmosis. And yeah, I'm the co-founder of Soon. My name's Joanna, and I've been challenging myself to interview the 100 most insightful founders in crypto. And today we definitely had a very, very good chance of getting a very interesting conversation here recorded. Dave, welcome to the show.
Hey, I'm Dave. Thanks so much for having me, Joanna. Yeah, excited to chat about
Yeah.
all the things.
Great to see you finally after all your travels and not my travels, right? Yeah, maybe we just get right into it, right? Let's get into your background story. I know you from a while back, even before I started soon back in the ZK days. For maybe the audience, just tell us a little bit about your background. How did you start Osmosis and how did you get into crypto in the first place?
Yeah. Okay, I guess maybe start with crypto.
Yeah, let's start
Hmm.
with that.
Yeah, so in high school, I was really obsessed with this thing called capture the flag competitions, which are these security competitions where people put up some vulnerable problems online and say, like, go break these. If you figure out how to hack into the system, you get a flag, submit it to some website, get some points, go up the leaderboard, you try to win the weekend long competition. So I got really into these, and in particular, cryptography ones. I come to college and I'm like, I'm really into cryptography. I should go see what this like cryptocurrency club's about. That's probably related. Walk in, go to the intro session. We're talking about how do we do post-quantum cryptography, zero knowledge proofs, BFT. I'm like, oh, this sounds like exactly like a set of problems I find fascinating and want to solve. And then I fell in love from there.
Nice, nice, nice. So you were one of the what's the right word? Those like prodigy, like very early, you know, knowing what you wanted to do when you were in high school, right? Like kids that knows what they want.
That's kind of high variance. I know what I find fun, but like, does that end up being, you do physics, you become a pen tester at like one of the audit companies, you go build stuff. This is stuff you figure out as you go do things.
Yeah, yeah. And then how did you then go from what you wanted to set the problem that you want to solve and then finding that solution.
Yeah. So actually, what was really fascinating is that the first semester of being a blockchain at Berkeley, that I joined the research department. Which what we
Right.
do is we have to go read a paper every week and go present it. So it was actually a really fun way to go learn about BFT, Paxos, snarks, cryptography, and all the cryptography mechanisms. Then this ended up joining Tendermint to go kind of work on everything Cosmos, the SDK, consensus design, proof systems, etc. At the same time, I was also like fascinated with zero knowledge proofs, and after being a Tendermint, I switched to doing ZKP research for years. Of like, how do we actually make these zero knowledge proofs faster, or what does recursing them mean? Kind of a lot of the stuff that we now take for granted. So I just really wanted to
Yeah, yeah.
make this happen and make the privacy vision real.
Yeah, yeah, you were definitely. I remember the days like in the Cosmos ecosystem, everyone, all the top talent, like in research side, was joining that ecosystem left and right. And how did you then like, turn this kind of academic interest into something production ready?
Yeah. So what happened is in I think it's 2021. I think no 2020. Like, okay, what are the biggest problems we have in blockchain? Okay, we have scaling, but it kind of seems like we know what to do to scale. And I would still say, looking back, I only consider them as like one kind of new idea of how to scale L1 since 2020. The rest I think is just we knew what to do and it's a matter of doing it. Then we had the other big problem we had was proof of stake. But again, proof of stake
Yeah,
we kind of in 2020 I thought we'd kind of really solve proof of stake.
right.
Now where I am 2025, I would say no. We've got some more going back to the drawing board to do. But the last problem we had in 2020 was privacy, and so we had two big problems at the time. One was what we still face today: there is no anonymity for anything you do. The
Hmm.
second, which we still face, was MEV of hey, you can get sandwiched on all of these chains, or you can get yeah, the proposer has huge MEV power, and so we decided to found Osmosis around aiming to eliminate both of these. Let's eliminate the anonymity problem, or sorry, let's fix the anonymity problem of everything you do is linked. Let's make that anonymous, and then let's fix the MEV problem so that sandwiching becomes a thing of the past.
Yeah, for sure, for sure. Yeah, it was definitely one of the very innovative ideas at a time. And I also know there's a lot of like backstories as opposed as it goes into the founding of Osmosis, like you, Sunny, and actually Lily. We
Yeah.
were just talking about this before we started this interview. Really interestingly, right, there's a lot of kind of origins between the Solana ecosystem and the Cosmos ecosystem. And I didn't realize this, but one of the lesser known fact is Lily was very instrumental in the founding days of Osmosis. And you guys also had like an interesting story where you started as like Solana validator, right? And then you
Yeah.
earned your first pot of gold through that. Is that
Yeah, some of the initial,
Or-
so Osmosis was bootstrapped initially. Some of that funding came from the early testnet Solana validator. That was some of the initial
How was that? Was
capital.
2020 or it was before, right? Even
Yeah, a bit before. I think the testnet's
yeah,
2017, 2018.
2017. Yeah,
20,
that was
20.
the when Solana launched its coin. Yeah, I think 2017 is when that whole validator business started. Yeah, that's cool. So yeah, so then with all these kind of intertwined interests, wanted to bring us back to kind of what you're working on right now, right? Something that I found really interesting is you being really, in your own words, right, like obsessed with the issue of privacy in on-chain, right, in crypto, and also I think with everything that we were alluding to, right, like this cross-chain fragmentation issue as well. So, like, you guys are already working on this new solution that is a cross-chain swap that, like, as a user, I don't even need to know, right, which chain I'm on. So yeah, so tell us like maybe what's the vision there, right? Like what do
Yeah.
you think the success case will look like for this product?
So I think the success case is, what do I want to do as an individual? I want to be able to hold assets self-custodially. That means there's kind of no tail risk on. I can always access my funds. I don't have to worry about an FTX situation or an exchange shutting down
Yeah.
or going insolvent. Then what do I want to do beyond holding? I want to earn yield, like go to lending markets and stuff. I want to be able to trade things like swap USD for Bitcoin, etc.
Mm-hmm.
I don't actually care about what chain I'm on. Like, what's the user behavior I want? It's buying assets, or it's doing something with assets like staking or lending, or maybe more and more exotic DeFi. The thing I want to be able to do is kind of get all the functionality I want without leaking my identity. So
Yeah.
this means that I think the way you start is first buy and sell assets, then trade everything, but you never think of what chain you're on. It's just trading. Then get simple earning opportunities like staking, lending markets, very low on the risk curve.
Mm-hmm.
And then maybe get things like more exotic, like do you do leverage or something? And with leverage, I would want it to be something where it's not, my exact position isn't known to the market. Where today, if you're on a centralized exchange, and you take a leverage position, and let's say you have $500, you lever for $1,000 worth of Bitcoin, and if Bitcoin goes down 50%, you get liquidated. But no one knows your liquidation price except the exchange.
Yeah.
If you're on chain today, you do the same thing with any lending market or perps market. Everyone knows. This is not great. You want some market transparency about the collective, but not about you specifically or the exact price. Maybe a price range instead. So the goal would be, okay, if you start expanding leverage, hit the trade-offs of there's overall aggregate info known to the market, but nothing about any individuals is known.
Mm-hmm.
And so the general goal is like give you kind of all the functionality you want, but with your privacy as an individual preserved and sufficient transparency for the system. Turns out for spot, the sufficient transparency is pretty simple. People, how much money is shielded, that's kind of all anyone needs to know. And for leverage, you start having more transparency to figure out how to build. Hey, how much total debt is there in the system? That's a key variable people should know.
Right. So this cross-chain routing engine, right, that we were talking about, that you start from any chain, swap to any chain, any token, and then automatically return into the privacy set. And is this whole idea? I think you mentioned this to me before, right? Like privacy doesn't have to be an application, right?
Yeah.
It can be
So
embedded in the infrastructure. Tell me a little bit more about that perspective. Like, what's the
yeah,
UX you're trying to achieve?
privacy is really key, but it's not really an app on its own, uh, unless you consider like HODL an app. But people also want to go do things. Like, you want to pay people, you want to trade stuff. So typically, you often have to prior attempts have tried embedding these, where you kind of have one privacy zone that lets you do kind of all everything, but you don't need to. If you're willing to make the trade public, the fact that someone in the world bought 1,000 USD of worth of Bitcoin, but no one knows who it is, then you can tap into the best liquidity across any blockchain. You can get the token breadth of any blockchain, and you just route to that. Or for lending, you can route to the best lending yield out of all lending markets you consider sufficiently secure. Yeah, like, I don't know, imagine Aave, Morpho, or Camino. And so what we've done is we started with, let's get all the routing to get the full asset breadth for kind of every asset in crypto. Oh, and then we'll go get all of these private by getting them bridgeable and routable to the privacy layer. And then we don't have to attempt to make an own liquidity. We can tap into whatever is the best liquidity already.
Yeah,
so people shouldn't have to think about chains. Like, chains are a detail as far as most users are concerned.
No, definitely agree like 100% on that. I think what's interesting to me though is like there still seems to be a few trade-offs that you need to make when you make a routing engine. So what do you optimize for, right? Is it the performance? Is it the privacy guarantee? Is it like the this cross-chain UX that we're talking?
Yeah. So I guess there's like 3 key things. There's latency, cost to the user, and I guess decentralization of the bridge, or like maybe rug risk of the bridge. There is a 4th one of privacy, but I think that's a much later stage of. Right. Initially, how I'm imagining this is the actions are public, but the actor is private. And then as time goes on, we can try to get more of the actions private as well. Making trades private is called a dark pool, where you don't have these visible on chain or visible to anyone in the clear. So instead, maybe you have a TE or an MPC operator, and you figure out some trade off to strike. But the biggest thing is get the actors anonymous first before any like dark pool like thing. So you can make a similar claim for payments across chains, where you could try to make like a method to like I can pay you in such a way that you can claim from a shielded pool later on. Like I can pay you on base, you can claim from a shielded pool later. So these are unlinked. I view that as much later. So this trade-off we're really striking is between latency, cost, and decentralization. So the goal is basically stick to bridges that feel sufficiently secure, like I ideally like client proofs and more, e.g. this is what IBC and like Union do, but often you don't have like client proofs for a lot of things. So then let's go to large MPC committees or multi-sig committees that are all TE constrained. Because thankfully it's not a great trade-off, but is unfortunately where every stage 1 rollup is where you have like a base multi-sig that can take a lot of funds, steal funds. But there's never been a multi-sig compromise that I've been able to see of more than 4 actors. So okay, great. If we have all of the multi-sigs very transparently known, and you need 8+ actors to be compromised, that feels like a very strong spot to be, especially relative to using any L2 in the market right now. So keep the bridge there and then optimize for speed.
Gotcha. Interesting. Yeah, I guess maybe just to bring this into perspective. I mean, you've been in the DeFi, like literally starting in the DeFi summer, and then like now have seen the evolution of DeFi over the past 5 years. This OG status must have given you some insights as to like what users care about. Do you think privacy is something that users care about?
I don't think so. This is used to. One thing that's kind of nice about the last 2 weeks is privacy has become the narrative of all crypto Twitter, and now it's
it's
people
like
are
all of a sudden become cool again. I don't know. A couple VCs points have started that, I think.
Yeah, everyone's like, of course you want privacy. Just 3 weeks ago, I was having I was having debates every single day. But no, I genuinely believe people really want this and really care there, and it's just they are not aware of the problem. It's somehow very intuitive that you don't want everyone in the world reading your text messages. I think it's pretty clear you don't want everyone in the world seeing all your payments or all your actions as well. Like, these are things that, you should be able to show them when you want to, but it should be your choice. It should, just like you don't want the FBI, Apple, etc. reading every single one of your texts, or you don't want your parents reading every single one of your texts. Well, if I paid you like $20 for lunch, you should not get to immediately see every single thing I bought. Like, what restaurants I go to, what gas stations I buy gas at, medical bills. This stuff tells you a lot about how my average day goes. It's just like it's just like a closeness violation. This is not, you wouldn't ask this of someone you just meet. Well, yeah, you shouldn't get to know it for every stranger in the world.
Yeah, for sure, for sure. I think it's just one of those issues that's like once you see the necessity of it, it becomes almost like inevitable. It's really just like how do we educate, right? The folks that initially may have hold out or pushbacks on this. And
What's interesting is like companies see it pretty immediately. I guess they view a lot of their
yeah, that's a good
payments
point. Yeah, there's more institutions in this cycle, right? That's what defines this cycle's meta different from the last one. So maybe that's why we are seeing, maybe it's not just the narrative shift. Like, thank God, there's some like use case behind it too. Yeah, institutions adopting it.
or even like payroll on chain, right? Like, you don't want your payroll public to the world. This seems like very clear properties that companies deal with every day.
Yeah, for sure, for sure. Anything else? I'm just gonna go back and dwell on that last question a little bit. Like anything else that you've seen kind of just from the evolution of the DeFi primitives in the last, like 5-7 years? Like what have like caught your attention in this process?
It's maybe hard to say where this should sit in. It's very obvious in hindsight or incredibly unclear. But the shift away from public visibility of like a lot of markets are going towards how do we get faster, centralized actors able to kind of place orders on chain at very high speeds and prioritize like them canceling. This looks much more like central limit order books. Like even just the rise of like prop AMMs on Solana in the last 2 months. Hey, another way to word it is we've basically have a bunch of proprietary private funds placing orders all the time, doing all sorts of gas optimizations to update their positions super quick and getting Jupiter to route over them. So I think it's been surprising just how much it's both surprising and expected. Where why is it expected? It makes sense that
we're trading
order
off
flows,
our decentralization ethos for higher performance. Is that surprising?
Yeah. So so on the LP side, on liquidity side, this makes sense. I think it makes less sense. What's been really shocking is just the lack of care of decentralization for the last I want to say 16-18 months. It feels like it's finally coming back. That was shocking. Everyone's like, let's become a centralized sequencer rollup, but let's skip any plans for becoming stage 2, and let's really just have one node that operates really fast. Base is getting away with it. They have, Coinbase as a big legal team. Therefore, we can all just be a centralized multi-sig in one node that shuts down when AWS East goes down. That's been that was kind of crazy to see, like the meta shift in nobody, but it not being an important user property. So I don't think it stands. Like, I think actually going to L2 single sequence worlds takes a ton of sense as long as you have like failover and the like. This does strike a great balance of security and speed. That's not where we are, and it's not clear that there's. I think it was surprising to see how much things fell from innate excitement for going to a fully decentralized world versus, okay, it's not immediate market demand, so it's not what I'm going to work on today, and it's not what anyone works on today for 4 years continuously.
Yeah, I mean, I have a maybe not spicy take, but I have a take on this, right? I just think this goes back to that whole the institutional adoption thing that we're talking about now. Like the crypto space is like treating the Web2 giants as like, you know, like a common enemy, right? So we're trying to compete with those. You know, Visa is processing their transaction at 80K per second. So there's nowhere in public blockchain space right now that can consistently hit that kind of TPS. So we're kind of like, you know, if we really want to bring in the next, you know, whatever million people on chain, like we have to almost replace these off-chain mechanism, right? And that's why like the performance race has become so much more important, because we are actually trying to not just be like a on-chain version of Visa, but actually replace Visa altogether, right? That's like the new ambition. So so the ethos of decentralization becomes almost like has to take a back seat while we're trading.
What's always confusing with this to me is like, okay, let's break down 60K TPS. Let's round up. What is a transaction? It's a sender, a receiver, a number, and a signature. Okay, so sender, receiver, call it 64 bytes. Signature, 64 bytes. Amount, 8 bytes. Oh, okay, 32 bytes. Round this whole thing up, 256 bytes a transaction. 60K TPS times, let's round the transaction to like a kilobyte. 60K TPS is like 60 megabytes. Okay, can we figure out how to gossip 60 megabytes a second and get like finality on that? Yeah, like that. Why can't we get a network of nodes across the world that could jointly talk at 60 megabyte per second average throughput? This seems people's homes like can have 200 megs per second off it. Like, why is, yeah, because that's much harder, but it's not 2 orders of magnitude harder. Data centers get gigabytes per second easily. Yeah, so this feels weird. Okay, 60K signature checks a second? That's nothing. Like an 8-core laptop can handle that, let alone like a server. So it kind of when you zoom out like with that framing, it's always a little bit odd. That like smart contracts and stuff start like really increasing execution costs, but even just payments are like perfectly parallelizable. It's quite elegant. It's always surprising that are we really bottlenecked on this, or is there some other thing we're skipping if we're just trying to go for payments?
Yeah, no, that's fair. I think there's definitely a bit more like technical, you know, roadblock than just the payment side, right? Like when we were talking about some of the more, you know, what's more in the meta these days, like streaming, or, you know, we're talking about like stuff that needs like data storage layer, right? And then the coordination layer, all that. But yeah, no, I think the main thing goes back to your point is, yeah, I think as a industry, we like collectively have gotten to a point that we are starting to see that first stage of maturation, and we need to kind of like get to a, like, this is what Soon is like really all about, right? It's like, how do we make this so easy for any like institution or enterprise or even government, right, to just adopt this like high performance stack and build their own version of exchange, their own version of the chain. Without having
even like if we go to government, even like getting identity and governance on chain would be great. Like, oh, can we really? Oh, that's really exciting.
Exactly. Yeah, I mean that's the whole point, right? Like we kind of also reposition ourselves from just previously building like a few, you know, like single L2s to now like perfectly full suite, you know, product that people can use to build their own kind of like launchpad of perps and launchpad of chains. And then can be L1, can be L2, can be privacy preserving, customized corporate chains, right? So
they kind of, because they own their own chain, so they can like control order flow and
they can control their order books. They can control their like the limited set of like validator participation, their revenue flow, right? Their privacy customization there, performance customization there. Yeah. So it's fully baked in as a new L1 standard.
It's so interesting how like the cycle goes of like everything should be we should scale the L1 infinitely. No, we should have many independent app chains. Oh no, we should come back to the one. It feels like the cycle keeps continuing, and now we're in the app chains are a great part of the cycle.
Yeah. So that's the thing. You have to have a vision, right? You can't just
Yeah.
like let the cycle to
Rotate.
like determine what's cool and what's not cool to build. I mean, speaking of which, I think you have like the literally the credibility here to talk about the subject matter. How do you, as a founder that have survived so many cycles, right, determine your product roadmap?
I generally think about what is the most important thing to work on and what is like the app experience or like missing link I want. Actually, I feel incredibly happy every day that it's kind of a weird thing that we started with the premise of two things like privacy and then MV resistance. We did the MV resistance stuff and got very far down a different roadmap, and it's finally now like started a little bit before the 4 year mark post launch. It's like, okay, coming back to privacy as a full focus. This is so exciting for me that yeah, this is what I've been wanting to work on is like, why did I choose ZKPs as a research area in university? Because I think this is so important. Privacy is like to get right. And then why did we start Osmosis around this? Because I think it's so important to get right. And now it's finally time that I'm working on this. So how do I choose privacy? I think about what matters most to like make happen for the world. And I had privacy as like this thesis for a very long time. Then as AI keeps growing in dominance, the risk of what can happen with your leaked data keeps increasing, and like kind of the damage you can get. This is needed now more than ever because of the rise of AI. So then, okay, this is fantastic as a feature. Now what's the product? Well, then it's, okay, what do I want to use every day for financial privacy? After, once you get financial privacy, then you can figure out more and more things on the web, but let's get financial privacy working great first.
The fact that you were so consistent,
Yeah.
almost to a fault, like very obsessed about this problem that literally hasn't been solved, right? Still, 4 years after you guys started solving the problem, it's really commendable, right? So yeah, no, I think it's just like every cycle, like we're in this really interesting space where like people optimize for a lot of it's like what's hot on crypto Twitter, right? So again, going back to your very first point, is now it's like all of a sudden it's cool again. So now you don't need to overcome that educational barrier, right? Just you can just like start talking about all the implementation, the execution side of things. Yeah. So if anything, like thank those projects that raise millions from VCs that are making the thing hot again.
It's gonna be so exciting in like 10 years. You explain how does a payment work, and to explain the end-to-end flow, we have to describe the magic of a zero-knowledge proof. And hey, I paid you for $20 just now, and nobody knows that I paid you except me and you. Now we can go reveal it to each other, later. But even though we've done this, everyone in the world knows that a payment occurred, and the entire and no double spendings happened. And
I think
I'm going to explain that and how zero-knowledge proofs relate. It's gonna be so cool.
Why do I feel like I had a moment, like remember like when we first met at the SBC, I think we were talking about like building a private Venmo. That's like the ultimate the ultimate task is to like accomplish that. So yeah, so I think it's interesting that maybe we're not too far away from there anymore. Yeah. Let me come back to like some of the infrastructure side of things, right? So we talked about like the use case and the applications that you are working on the infra side. Just I know that like, for instance, like the cross chain routing engine already supporting soon via like the Jupyter API. So what made you decide to include like the soon liquidity this early? Yeah, how do you like evaluate
So
partnerships?
I think as a user, I think what do you want as a user? You want to be able to access kind of any token that's live. So is one of the best liquidity sources for it on chain, and is it something we can route over? Yes, then great. It should get listed. Like this is kind of the joy of permissionless systems.
Yep.
And now what's the joy of being able to route to aggregate over many dexes? well, okay, then you can get the joy of like, it's not really a choice we have to make. It's permissionless in that anything that any of the DEX supports can be a thing that is supported on Polaris. So then
Yeah. Go
the
ahead.
question starts coming in much more when you have to make reason about new chains or new L2s and like new bridge integrations. Okay, what is the security risk of this additional bridge, and what is like the additional cost of integrating? And this is one of the things that's like kind of hard still about the cross-chain stack, which is that you don't have unified standards for bridging. Like, you know, there's 6+ different bridge projects.
Oh my
if you
God.
include like the
You're preaching to the choir.
yeah.
So
And
true.
it's kind of crazy that like we're at this maturity level and it's still a problem. Like, oh, you
Yeah.
can get assets from mainnet Ethereum to the L2s, but you need an entirely different code base to get any L2 native asset
Imagine
into a mainnet.
doing that between SLP token standard and the ERC20. Yeah.
Man.
We were just talking to like the base team who launched their interoperability layer. They decided to build their own bridge between like Solana and base, and we were just like, hey, this is what we build. Let's like please unify the at least the interface, right? So like the soon base version can have the exact same user experience as like the base bridge. Yeah, I don't know why this is such a big problem in our space. It's really freaking annoying.
Yeah, it's very surprising that as like a decentralized space we have such a big issue on getting standards aligned.
Yeah.
Like, you'd almost imagine the inverse of like, okay, yeah, you have this initial phase where everyone tries their own thing, but then you'd imagine there'd be a consolidation phase for integrator efficiency, at least pre-LLMs. I still find it pretty surprising that this didn't happen. Like, you get aggregators that will like aggregate all sorts of different DEX, heterogeneous DEX interfaces, but you don't really have anything super clean for bridges. Instead, these are in like, swap aggregation. And you don't get the bridge providers wanting to conform to one standard. Part of it relates to like writing a bridge is some of the most security sensitive code you can write, because it's one honeypot that can leak a lot of funds. But I also suspect there's a little bit of a fear of like people touching the code, because versus like truly a security risk. On the security side, one of the best things you can have is a rate limit to protect things on the bridge, and most of our bridges still, like many years into this, don't have rate limits. The two biggest sources of hacks are bridge hacks and lending market hacks. I've never heard of a lending market with a rate limit for withdrawals. No, I just gotta take it back. I think Oyther added one after the hack. But then, so one. And then on bridges, a couple do, but like CCTV has one, and then Wormhole has one post-hack, but most others still don't.
Wow, you're almost giving the Lazarus team.
Oh, they have it in IBC. IBC has they changed support.
Exactly. Speaking of that, I wanted to actually, maybe before we end on our conversation, I wanted to let you know that like there are institutions that we're talking about who want performance, who want customization, like SVM chain that settles onto Osmosis. So that is interesting. I mean, we will have to talk about this off chain a lot more. Bridging Solana execution into the SBC world with privacy already built in.
Yeah.
Do you think that will accelerate the cross-chain routing adoption?
Yeah, okay, let's see. We get SVM. Yeah, if there's... I think the more independent app chains that are on slightly different stacks, that have real usage, I think this does actually accelerate a lot of cross-chain adoption and chain abstraction. Because
exactly
right now, the problem is big, but it's actually... You face a problem more in liquidity than number of bridges, because the number of spots with intense user activity is kind of still two stacks of like EVM and Solana mainnet, like EVM like stacks, Solana mainnet. So as the problem increases of either more VMs or more SVMs or Cosmos things, I think we'll get even more drive to aggregate and abstract the chain you're on. So as a user, it's really just you have a wallet that's key material, and the rest is handled. I even think that we're going the direction that a lot of apps are doing tricks to give you kind of extend one wallet's key material to many ecosystems. So we have two fronts. One is the extensions are all supporting more signing algorithms. So now you can unlock kind of start more chains as a starting point. The second is apps are starting to go more in a embedded wallet or MPC wallet style systems that kind of give you on-chain security guarantees, plus can take in more forms of key material, e.g. like pass keys or OAuth. So I think these combine to fix a lot of the underlying problems where the user has to know what chain they're on.
Yeah. For sure. Yeah, it goes back to the user experience, right? That's why we're working so hard solving these infra problems. Okay, I usually ask my guests on the show to talk about one non-consensus view that they hold, right? Anything that you feel like it's overlooked or underestimated in the space right now that deserve more attention?
About non-consensus views, I think too many people pivoted to AI, where if you choose what to work on, what matters more? Making AI come faster, like a year earlier, or going to work on the things that make the world a utopia with AI? So what should you do in that camp? Go work on privacy, so like you still have sovereign rights. Go work on making software.
Yeah.
Go work on software that puts you as a human in charge. So I think that like involves a rewrite of social media. Go reimagine social media to not be rage bait that keeps you addicted, but instead gives you what you want out of the world. Go work on like iteration speed of real things, like making buildings faster or transit faster. Go work on healthcare and biometrics, biotech, to make us as humans faster. Okay, yeah, our thinking machines are getting super sentient. Okay, let's make us as our bio machines run better. I just think these are much more inspiring things to work on. This is why I think privacy is so central. This is why I've like chosen to spend so much on. I think if I rank these, it's what I consider both most important and second, what I consider myself as having a very unique edge on. Yeah, I think
that's a good answer, man. I could have said that any better. One consensus here is, as a founder, your life is a lot more challenging pre-TGE versus post-TGE. What do you think of that? Agree or not agree?
Okay, so I guess for me that would be, was life harder pre-launch or post-launch? I think that
sounds like it's both.
No, hard. I think post-launch is harder.
It's definitely post-launch for me.
Yeah, it's like it's also like, what's the time
this
comparison?
Is definitely non-consensus. Like a lot of people don't agree with that. Yeah, tell me about yours.
Just what are the number of challenges you face post-launch? Hey, well, okay, that's like, just look at the calendar time. Post-launch for Osmosis is like 4.5 years. Pre-launch, like 8 months.
Mm-hmm.
Yeah, I've had bigger problems in the 4 years post-launch that are
right.
on every dimension I could think about that I did in the
I see,
8 months of pre-launch.
So purely from like the timeline perspective.
Yeah, like just the types of problems. I also think this is correct. I think you want to keep solving bigger and bigger problems, which means that you have bigger and bigger issues to deal with.
Yeah. I think for me it's just like a different stage of game, right? Like people expect a lot more from you, and you have a lot more responsibility. With more power, you come more responsibility, like or not. So then you're gonna kind of like being judged by a bigger group of audience, and you have, again, like you're being seen as a more mature player, right? So like you need to continue to kind of set the standard, right, when it comes to like shipping new products, right? And cannot, anytime you make a mistake, like first of all, do not make mistakes, right? So first of all, just do not, right? But I think that's the point, right? Like you just have a lot less error room because the consequences is not like different magnitude. So so the pressure is off after TG.
But maybe here's some more non-consensus take that most UX design in crypto is very conformist. There's very little experimentation for like net new interfaces. Like how many things are the same trading view chart swap modal? How many people like question just even the color palettes you do on a site? or like, how rounded all the boxes are. These are, I think there's been a large push to be very same on most websites, not even in crypto, not just crypto, but across all industries. I think similar to how like Cybertruck was the first like really big deviation from the standard car design.
I see.
I think there'll be a big deviation
The
in
ugly
like
beauty. Yeah.
App UX. Yeah, I think we'll get like app UX changes, especially as like LLMs keep
That is
improving and
Yeah.
laptops get better GPUs.
Yeah.
Maybe we'll get more personalized websites that are like rendered just for you.
Yeah. Wow, you have to build that for us.
Yeah. No,
Take it
then
on
the
your next career.
yeah, the reason I'm not doing that, just like it's gonna be the same, the reason everyone else isn't. Gotta solve one problem, and that's not the problem you've earned
One
the right to
tiny
solve yet.
problem. Awesome. Thanks so much, Dave. It's always a
Yeah,
pleasure to have you,
yeah, it's super fun.
just in my corner. So I really appreciate you. And yeah, love to, continue to check in on you every now and then. And thank you again for being on the show.
Ditto, it's very fun. Thanks.
Yeah.